Hi guys, this is Ray from nextforextrade.com and today is the 1st of August 2019. So, first thing to kick off with is the couple of trades I had on the Euro JPY that came through, and yeah, I'm happy with the way that these played out. Just a quick recap, I was short on this. I did have two positions on Euro JPY. I'll leave a link into the other videos to see, so you can see the setups of those. But basically the plan was to short for initially 1%. I added another position, which then I didn't like the price action that I was seeing on the lower time frames. So it ended up with me taking one out at just over break even, which we can see in the results down here. And then the other one for the full 1%. So overall, one way you can look at the way this trade took place was I risked about 2% of my capital to achieve a 1% gain. So on here we can see this is my 15-minute, this is my hourly, this is 4 hourly, this is daily. So just looking on the 15-minute, because it's a bit easier to see, we can see that these two lines here represent the two exits that I had. So this was the exit I took at break even. The reason that I wanted to, obviously I didn't have all this hindsight to see, what the price was going to do. I'd gotten out there. The reason I had exited this one here, because my entry would have been, slightly higher than this, is I wanted to reduce my risk overall on this position. I did have like I said, the 2% in. My stop loss was above these highs here. So this kind of level here, where this price is double topped, my stop loss was above this. So this area here, and if we look on the daily, this area here. So I was pretty satisfied with where my stop loss was, but I did want to take off some of the risk because the position on this one, the first position, wasn't as good as the second one. So this one got out at break even. The reason I wanted to take it off there as well, rather than letting it move a bit more, was because there was quite a lot of support in the price at that level. So I didn't know at that time that the price was going to drop through and fall much lower. So taking it out of break even was just a kind of safety measure, and taking it out specifically at this level was because obviously it was the price I got in at, and also I felt that there was a likelihood that the price could move away and move higher, which in fact it did temporarily before moving much lower. But using the concept of support and resistance to help guide my decision is it's a good way to manage positions overall. Because what I've done here is that I knew that there was a good likelihood as the price approached this level that it would find support and reverse away. So taking the decision to remove a position, or if you're taking profits, taking some money off the table before these levels of support or resistance, just can be a part of your strategy. Excuse me. So the second position I had, and this is the one I really wanted to see, make the money off of get paid for this. Basically, we can see where my entry in this. This is 2096. So I'm going to use this one here. 20 spot 962. So I'd entered this here earlier in the week. Get rid of this one now as well. Hang on. Okay, so I'd entered this earlier in the week, and this was my exit price here. And this basically, I think hourly will give a bit more context for this. Just trying to clean up this chart a bit. So we can see, yeah, the hourly kind of tells a better story as to why I got out on this. So my one-to-one risk reward, remember my stop loss was above this double top area, so above these highs here. And my entry meant that my take profit on one-to-one was here. This was the exit time. Now I felt this was a good time to get out. Firstly, obviously it met the profit target that I was after, but also it was interacting with the lower edge of our standard deviation channel. So at the time that I would have exited this, I would have been able to see that this much information. So I was assuming this was a channel. I didn't know as much as we do now, but the fact that it had fallen away, come down, hit this level, gave me some indication the price was oversold, and therefore likelihood of it moving back to the average at least, which it did, and it's coming back down again to the lower standard deviation channel as we speak. But you know, really, it's not about being greedy. For me, I just wanted to hit my target on the week, which I did. It took a few days to come to fruition, but really, this type of trade was only possible because it was done earlier in the week. The reason I was happy holding this over several days was because the initial position was taken on the Monday, and it closed out on the Wednesday. Now, taking if it was a similar situation where by the second day, let's say I opened it today, and by Friday, if it wasn't really doing what I needed to do, in that instance, I may take the executive's decision to close out the trade, even if it's in a loss or even if it's a small profit. Just because, as I keep saying in these videos, I don't really like taking positions and holding them over the weekend, because it leaves me liable to a bit more risk because of the way the market can gap. So for this week, I think I'm pretty much done on taking positions. I will have a look over the market just with you as well, just to see anything that might pop out. But this means that I've ended July on just over 4.5%. So here's from a £10,000 account, £4,458 and change. And everything that I do in these videos is available on the MyFX book link as well, so you can see how these trades have panned out. It's 100% transparency, just so you can see and understand exactly what I'm doing here. Excuse me. So yeah, this and what I'd mention on that as well is it is important to focus on the percentage returns, not the pound or the dollar or whatever your currency you're in, not the amount that you get in money in terms of how much you kind of profit. And that does frustrate me sometimes when I see, on the Instagrams with the pictures of the the profit and loss, and they're all these big numbers, but that has no context. It's really about the percentage. You can see in each of these trades that I've taken, I've risked no more than 1 or 2% of the account to get an overall 4.5%. So it's not the pound amount, it's not the currency that you trade in that is important. It's the percentages and how much you risk to make that return. If you've got if you make £1 million and you've risked 200 million to make that, pretty extreme cases there, then I'm not as impressed as you making a smaller amount with smaller amount of risk. So it's really just look at the percentages rather than the percentage, and the amount that you risk is what's important overall, not the actual amount. Even if you've got a small £2,000, £1,000 account and you're consistently making 1 to 2% per week, even per month, and you're risking a fraction of that to make that return, that's what good trading is about, in my opinion. So just bear that in mind, and these things do kind of add up as well. As this grows, obviously there's compounding. As this account grows, then I'm more likely to change the position size. At the moment, it's just £100 or £200 at a time. But as the account gets bigger, it means that 1 to 2% is a bigger, based on a bigger amount. Similarly, if the account were to suffer drawdown, then I would reduce the position size. So yeah, just understand the concept of percentages, the amount that you're risking, and just be patient and understand that compounding of an account is something that will see you make bigger returns over the longer term as well. I'll just have a quick look over the market. Like I said, I'm not looking to get into anything more this week, but I'll let you know if anything jumps out. And really, I will just scan through these now as if no one was listening. So I'll try not to just over talk on each of them, but basically to give you an idea of how long it can take you, kind of using this approach to the way that I trade here, to scan the market and make decisions. So I'll just look through, as always. I'm just looking at the daily for my first point. If the daily gives me indications that I could trade, then I would be looking at the lower time frames, 4 hour, 1 hour, 15 minute, 5 minute, for potential entry signals. And on the daily, what I'm looking for is a trend. So in a downtrend, lower lows, lower highs. In an uptrend, higher highs, higher lows. And I need it to be within a standard deviation channel. And in a downtrend, I'm looking for it to be overbought. So interacting with ideally this upper channel here, or at least above the average, which is this middle one here. And it's the reverse in an uptrend. So I'd want it to be, if the price was moving upwards, like it is, let's just take that as an example. What I'd want it to just do is to be interacting with the lower half of the standard deviation, and ideally below the average here. That for me gives good value for money, and is an indication that I could take a trade. Bear me one second. I'm just going to turn off these alerts here. Okay, so I'm just going to go through and I'm going to say yes or no to each of them, and that's literally as quick as the thought process is. So starting here on AUD CAD, no. To have sold, no. Looks like a very similar chart there. No. Maybe. So I'm saying maybe, first of all, because I've seen this interaction here. We've got lower highs, lower lows. Seen reversal candle off of the upper edge of the standard deviation channel. And viably, this could be worth a short. So this, for me, just looking at daily, is some indication to look at the lower time frames. But immediately on the 4 hourly, what I'm seeing is that the price is moving up. It's showing higher highs and higher lows, and it's inside the standard deviation moving up. Whereas my assessment on the daily is saying down. So based on that, that's a no. So next, no. So just make sure on that one sec. No. 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 Possibly. There are some good things and some bad things. Not ideal. So here, daily, we've got some lower highs, lower lows. We've seen the price break out of the standard deviation channel with a reversal candle. Ideally, we want it to be inside of the standard deviation. In this instance, it has busted outside of it, but This candle that we saw yesterday has interacted with some zonal support and resistance. That may go back further as well. It does. So it does give this indication that this level above yesterday's high could be quite a significant area of resistance. And in the context of this downward movement, it also is what we're assuming to be a lower high. Now, the fact it's moved past the low of yesterday's candle is good as well. And on these lower time frames as well, so the 15, the 5, starting on the hourly as well, there are some signs of lower highs. So, sorry, lower lows and lower highs. So these lows here have started to move lower. These highs here have started to move lower. But it's not quite there really for me because of what the 4 hourly is saying. So on the 4 hourly, what we've got is that same move that we were looking at on the daily there. But what worries me is this here, the way that this retrace, or what we're assuming is a retrace on the daily, the standard deviation kind of captures that, and it hasn't broken through it. It looks like it could do in the next candle maybe, but really this would be one to watch to see if it breaks through, moves lower than this kind of standard deviation, which would effectively be lower lows on these time frames as well. And in way of an entry, what I'd need to see is it pull back on one of these lower time frames to the upper edge of the standard deviation. So some reversal off of a standard deviation at the top, allowing for an entry. So yeah, there's a few things that would make this tradable. Basically, that aren't in place yet. Firstly, a break lower on the 4 hourly. Also lower lows and lower highs on the lower time frames. And also a pullback on low time frames to the upper standard deviation channel. So yeah, not great in terms of tradability right now, but maybe later in the day, or if you do trade Fridays, possibly Friday if that materializes. So this one, no, 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 no. No, 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 no. That's Bitcoin. No. So yeah, that's it. You can see pretty much scanning the market, if I weren't having to talk as well, is, you know, it can take less than a couple of minutes really to look for opportunities. And in this instance, yeah, there's nothing really tradable. I'd probably think next week would be the next time that I'm taking a position on this, on this account. So yeah, that's it for today. Hopefully that's been of use for you. Follow, subscribe, visit the website www.nextforextrade.com. From there you can arrange one-to-one coaching with me. And, you know, feel free to leave any questions or comments that you have below. Okay, see you next time. Bye.